Hello, welcome once again. Thank you for attending. This is Seewing Yee from the Yee Real Estate Network, a real estate investment club physically located here in the San Francisco Bay Area. And we've been helping our out-of-state, mostly California, real estate investors to buy out-of-state turnkey properties in the best cash flow markets in the country. And today is once again, we're back for a update. As a matter of fact, I can call this a second quarter 2022 update. How time flies, right? I mean, right now we got 1 month left for the first quarter 2022. So things in real estate, especially during this pandemic situation, has been changing on a daily basis, right? So we are on top of all the changes and developments, and we bring the products and houses to our out-of-state mom and pop turnkey real estate investors from not only from California. We also have members from in different parts of the country as well. Anyway, so without further ado, my special guest once again is Mr. Justin Zawodny. He's our Cape Coral network realtor who's been working with us within our network for the past several years, and he has helped many of our risk investors to buy great properties, cash flow properties for long-term growth and wealth building. So, before welcome Justin, say hello.
Hi.
I know Justin is very, very busy, but let me start off the next 5 minutes. I'm giving you my perspective or my take around this market, Cape Coral and Southwest Florida, Fort Myers market. Then Justin will finish off the presentation because Justin, he is the local consultant for us, so he knows all the details about his products, his houses, and what's going on currently and in the future. So without further ado, so much to cover. So let's get to it. From a high level, okay, my research, of course, I know I've been promoting Florida for the past almost 20 years, Cape Coral as well for many, many years. So from a high level, I know the real estate investment market here in Southwest Florida. But I can tell you one thing, during the pandemic, since the pandemic began, we have seen migration of people coming from the Northeast, New York State, New Jersey, all the Northeast, and even from California, and from other part of the Midwest. I mean, it seems like everybody wants to come to Florida for obvious reasons, for retiring and for jobs and all those kind of things. Now, and Uhaul also in the past couple of years have indicated that more people are moving by Uhaul from other part of the country into Florida as well. One additional thing I'm going to share with you that some of you may not know is that within the state of Florida, we're having more migration of people coming on other parts of Florida into Southwest Florida, the Gulf Coast, Cape Coral, Fort Myers region. So if you have not heard, for example, South Florida, Miami, Fort Lauderdale, West Palm Beach has been, according to some website, either Zillow or Redfin, they're stating that it is the most unaffordable market. And the rental rates is skyrocketing rental rates, like for 30–40% even in various parts of South Florida. It is making those locals, it just makes them thinking about not living there anymore to South Florida. And furthermore, if you have not heard, Tampa, the Metro Tampa, Florida, in the Gulf Coast, like 2 hours north of Fort Myers, Cape Coral, is also one of the fastest growing real estate market in the country. And then the locals there feel the pinch of the unaffordability as well. The rents has been rising, skyrocketing. Housing prices skyrocketing in Tampa, Florida, in the Gulf Coast. And what I've seen, all these pressures in all these recent events, I believe is causing people to move from South Florida across the state. The distance from South Florida to Southwest Florida, Fort Myers and Cape Coral, Justin, correct me if I'm wrong, maybe an hour and a half. people going to move to Southwest Florida from South Florida. People more and more going to begin to get away from Tampa as well to come down, and now want to have below in the Gulf Coast into Southwest Florida, Cape Coral, and because for right now, Southwest Florida and Cape Coral is more affordable. The real estate prices are cheaper than South Florida or cheaper than Tampa, and the rents are cheaper than South Florida and Tampa as well. So you have so many directions of people, population growth and job growth coming into Southwest Florida. So so I get, that's all I have to say. So now, Justin, if you could you know, Google Map, get closer to Southwest Florida. Now you can take it away and pick up what I just said. See.
Yeah, I mean, even on a more local level, you know, we're seeing people moving. The area that we've been promoting for the last almost year now has been in Lee and Hendry County, up in this area, the greater Fort Myers area. You know, down here you'll see Naples. We're even finding people leaving Naples to move up to Fort Myers, and they'll commute back and forth. It's only maybe a half hour to 45 minutes. But it's to the point where the Naples market has gotten so expensive that people can't afford to live even there. So even on a very local scale, we're seeing people move into these areas that we've been promoting. You know, down here in Naples, we scroll in, you know, these are some of the most expensive neighborhoods in the country. You know, you find homes down here for 25 to 50 million dollars. It's homes that people simply can't afford. Even here in North Naples, which used to be more affordable, your average home being 300 to 600,000. Even here, it's very, very difficult to find anything under $1 million. I mean, buyers who are in even a $700,000 budget are struggling to find anything to buy. There's just very little available. You know, so because of that, when you're dealing with such expensive homes, rents are obviously very, very expensive as well. And people are choosing to come up to the Fort Myers area, where, especially here in Cape Coral, you know, we have 4-bedroom homes. They're $2,500 a month, brand new construction, quarter-acre lot. You know, you're not finding anything close to that in Naples. $2,500 might get you a 2-bedroom condo in certain areas. You know, so that value is what's driving people to come here. When we look at the Cape Coral, you know, overview here, you know, down here in South Cape Coral, even down here, this is more of a luxury market. You can see the Caloosahatchee River here. Out here we have the bay with Sanibel, Fort Myers Beach, and then the Gulf of Mexico. These homes down here in South Cape Coral, you can see all the canals running through it. Majority of the homes, you know, you can keep a boat right behind your house on the canal, be out to the river in 10 to 15 minutes, and be out to the bay in about a half hour for your boating. They're very, very expensive homes. Even lots in this area are going for $500,000. The area that we've been targeting has been a little bit further north up here. You see State Road 78, that's Pine Island Road. This area just north of it is where we've seen the most growth recently, and where we've been able to get some really, really excellent deals. I'm going to zoom in really pretty close so you can see the difference here. We look at these areas down here south of Pine Island Road, you can see just how developed they are. You'll still see a couple of vacant lots here and there, but probably 80% or so developed, which has caused lot prices to become very expensive, and therefore purchase prices on new homes is very, very expensive. When we move up here just north of Pine Island Road, though, zoom in, you'll see just how many vacant lots still remain. I mean, we might be 40 to 50% developed. I mean, we have whole streets that are almost completely undeveloped still. Because of that, the lot prices are, I mean, almost, I don't know, 50, 60% less expensive, which allows that new construction price to be significantly less expensive, and really create these great opportunities. You know, we still have single family homes in these areas here. somewhere between $355,000 and $375,000, depending on the exact timeline that we're dealing with. If we have a little bit more time before we need to close, we can usually get a little bit better deal for dealing with something like a 1031 exchange where we have to close on a deadline. And we have to be very specific with the home we choose. It might be slightly more expensive. The reason why we've seen such growth in this area, and I know I was zoomed in on one specific neighborhood, but really it's everything right here, within about a half mile of 78. That's the area that the water system was just extended to. So this area down here, it's had city water and sewage for 15, 20 years at this point. This area up here just had that water system installed within the last 5 years. Because of that, the development boomed. We can now get a home which is on city water and sewer, which is far more desirable, especially for us as investors. We have much lower maintenance costs. We can get them at great prices now. And with these areas, I say 355 to 375 is our purchase price. I want to kind of emphasize that's our purchase price. Coming through Mr. Yee and myself, that price really doesn't exist anywhere else. I was on the MLS this morning looking to see, what the cheapest new construction home was in Cape Coral that's on city water. It's well into the 400s, almost $450,000. You can't get positive cash flow out of that. There's no way. You're charging over $3,000 a month for rent. It's just not going to happen. But because of the relationships that we have with builders, the ability to get homes prior to them getting to the MLS, we're able to still get these deals with positive cash flow. I can't emphasize enough how important that is. That being able to still have opportunities in a market like this is really something unique. There's not too many other networks that can do that right now. It's been really just a seller's market for the last almost 12 months, but we've still been able to get some really, really good deals for our buyers. And even if we look specifically as far as the opportunity to buy, even at our really good price, 355 to 375, if it weren't for how quickly rent went up in the last year, we really wouldn't have an opportunity. These areas, when we first brought a 3-bedroom new construction home to a webinar, we were projecting the rent to be right around $2,000 a month. If we had a $2,000 a month rent today with those purchase prices, there wouldn't be positive cash flow. It would be negative. However, rent went up significantly in the last year. We're now in the $2,300, maybe even $2,400 by the time these homes close, rental rates. And because of that, there is positive cash flow. This deal works. It's ready to go, and that's a great opportunity. So that window of opportunity really was extended really by the market. We got lucky there.
Yeah, Justin, let me share my view. Now, for some of you or try to do a cash flow analysis, a pro forma. Now, 350 to 375K single family home new build, if it rents for 2,400, even with the we all been hearing about the interest rate, creeping up and what have you, with the Fed reserve raising interest rate. Some people are thinking, maybe the numbers may not work. It works. For investment loans these days, right now you're getting like the mid-4, like 4.5%, with 20% down, maybe 25% down. Maybe the interest rate a little bit higher, maybe 4.6, 4.7, but it still works because as an investor, all you need is 20% down. With the interest rate, if you look at the taxes, insurance, and the property management fee on a monthly basis, the $2,400 monthly projected rent on a 350 to 375K single family home new build, you will still cash flow at the end of the month several $100s. So that's the blueprint for success moving forward. Okay, go ahead.
And that's just it. It's the blueprint for success, right? And we're starting with a couple $100 a month of cash flow, which is excellent. But year two, when that rent goes up again, even say it goes up by the average 8%, we're gonna have a little bit more cash flow. And year three, it goes up by another 8%, and we have a little bit more cash flow. By the time we're sitting here with this investor in year six, I mean, we're talking about hundreds and hundreds of dollars of cash flow, if not, I mean, eventually hitting thousands. And that's, a very, very strong, strong blueprint.
Justin, not only that, the from year one to year five and beyond, even at a 5 to 7% appreciation rate, right? Just do the math. I mean, your total return on an annual basis, cash flow plus projected equity growth. I mean, we're talking 5x and 10x for down the road. So you have to think long term, think about the total return, not just the first year cash flow projection. You have to think long term.
Exactly.
So yeah, go ahead.
Everyone knows that in the last 24 months we've seen enormous appreciation, and that's great for a builder, right? If I'm sitting here building a brand new house, it means I'm making a lot of money. Who's even happier about it? All the people who bought homes 3 years ago, who've just been sitting there watching their 25% down that they put on the purchase price 3 years ago. The amount of equity that they have, it's in some cases doubled, tripled their money in a matter of 3 years. I mean, we've seen some incredible numbers over the last 24 months. And it's really made quite a bit of money for some people. As far as inventory, like I said, right now the project that works the best, we have the 3-bedroom, 2-bath, right around 1,500 square feet, brand new construction, 355 to 375,000 purchase price. We also have some duplexes available. Those, probably looking at about a 525 purchase price on those. But I mean, they perform really well. Cash flow on those is about $500 a month when we have it leased out. So really good numbers on both of those projects. And again, the only reason that we have inventory right now, it's because it's off-market inventory. We have one builder who has about 120 projects currently under construction. That's both single family and duplexes. We have another builder who has about 15 to 20 single family homes under construction. We have another builder who has about 20 to 25 duplexes under construction. They could throw those projects on the MLS, and sell them very, very quickly. And they do that from time to time, but they also know about the strength of the buyers that we bring to them. And because of that, we do get access to that inventory before it makes it to the MLS. We avoid bidding wars, and we're able to still get some deals. So certainly good opportunities there because of those builders, because of the relationships we have with those builders, and because of the strength of the buyers that are in the Yee Real Estate Network. They understand how good your buyers are, how great it is to work with investors who are going to come back time after time after time to continue buying more homes. And they really do value that to the point where they're giving us these deals on homes before they get to the MLS. So certainly still some great opportunities available here.
Oh, absolutely, Justin. Now, one quick question, Justin. I know is different with builder from builder to builder. I know we hear about the supply chain disruption. The cost of construction is skyrocketing, and the cost of lumber and all that. So from the time once the inventory you have right now and on a weekly basis, whatever, when our investors come to you, when they want to get under contract, what's the timeline from the time they pay the earnest deposit to lock in the lot under contract, from the time the house is completed? Or how long it's going to take before the house is completed so they can do the loan and close escrow, typically?
So it all depends on, there's a couple different factors. The first one is what projects, right? Are we looking for duplexes or single family? Single family, there are homes ready as soon as 2 to 3 months from now. if we go with a very, very specific address out of the list, maybe as long as 7 to 9 months. If we're looking for duplexes, they're a little bit further off, probably 6 to 9 months to completion on those. And the biggest thing is if we're willing to wait a little bit longer, we typically can get a little bit better price. They understand that we're locking in a purchase for them, for the builder. Now it's just, we need to get this up so that we can get paid and sell it. There's no risk for the builder at that point. The buyers, they are waiting. They give us a little bit better deal. If we go for something that's about to hit the market, go to the MLS where they might get multiple offers, it's probably going to be a little bit higher, just because they know where the market is right now. They know just how many buyers are out there, and they know how much they could get for it. So I usually do recommend plan on about 6 months from the time we sign the contract till the time that the home is completed and we're closing on it. I think it's a pretty safe estimate. But one of the biggest things with that is we're locking in the price today, right? We have some buyers where they did the same thing. They locked in the price 6 months ago. They're about to close maybe in the next week or two. Some of them have already made, almost $100,000 because that price is locked. We don't use contracts that allow the builder to increase the price on us. We lock that price in. That's the price we're buying it for, and then that's really the situation that it is. And it's been really good for a lot of investors. It's worked really well, and that's why we partner with the builders that we do. Not all builders will accept offers like that, and we don't buy products from those builders. It's not a good situation for us as investors.
Yeah, that's right. Walk-in equity, if you show the patience, lock in the contract, wait, 4 months, 6 months, 9 months, knowing that while you're sleeping, while the house is being constructed, you may have some walk-in equity on a systematic basis. So by the time you close escrow, you have a walk-in equity. What more can you ask for? So Justin has made a number of our investors very, very happy over the past few years, and they come back. Capital resources allow them they can buy second and third property through Justin because they have such a great experience. And Justin is a one-stop shop. He has an in-house property management. He's very, very good in client service. How I know that? Because my investors come back to tell me, hey, Justin, doing a great job for me. We have a great experience. One would buy a second one through him, third one, fourth one, fifth one. This is amazing. So, Justin, you're a young kid. I don't know how you have all this connection. Usually, a real estate consultant takes them like 30 years to cultivate this great relationship with the builders, off-market properties, and you being a young, I don't want to disclose how old you are. You're a lot younger than a lot of us buyers, and myself included. But whatever you're doing, you must be doing something right, because we have happy investors. Not only right now, you're gonna watch over our investors' houses for a long time to come, because you and your team gonna be in this business for the long haul. And in Cape Coral, okay, so I know I don't want to take too long. We only got 2 minutes left, Justin, unless you have something important you want to say. But for the future, okay, for the next few years, what are the expectations for our investors? How are you going to continue to provide, given the record low inventory we are seeing everywhere in the country and strong demand for housing? We all been hearing that, right? So what's the expectation for our investors working with you for this year, next year, and beyond? What's going to happen in the Southwest market, in your market, in Cape Coral, and beyond?
The first thing I'd say is the market's it's unpredictable, right? We can project what we think is going to happen all we want. I know we have inventory today. I cannot guarantee that we're going to have inventory in 6 months, right? Inventory has been continuing to dwindle and get smaller and smaller. I was shocked a year ago. I was telling you, oh my gosh, there's under 5,000 homes available on the market in all of Southwest Florida. Forget just Cape Coral, the whole thing going all the way up to Sarasota. There's only 5,000. What are we going to do? Well, here we are today. There's barely 2,500, and it's continuing to go down. So, I mean, if there's interest in homes in Southwest Florida, I certainly wouldn't wait, because I can tell you we have inventory today, but I have no idea how long it lasts. As we go out further, like I said, there's been a lot of development in this area just north of Pine Island Road, because they just installed the city water. The city has approved the next phase of expansion. That's going to be up here in this northeast portion of Cape Coral. It's probably 3 years out. So, I mean, eventually, I can tell you, certainly, once that does get expanded, I mean, you can see all this vacant land that needs to be developed. There's going to be a large number of homes, but that's, years down the road. So going forward, we're going to have more opportunities. I don't know what they're going to be, but, Cape Coral has been a strong place to invest, to manage homes, to rent homes for a long time. I'm sure it's going to continue. I just don't know what that's going to look like. But I can certainly tell you right now, today, we definitely have some great opportunities to get into this market now and not wait. Who knows where the purchase price will be by the time that next phase of water expansion has happened. I really don't know at this point. If it continues the way it's been, we might be dealing with purchase prices in the 500s up there.
Yeah, that's right. We don't know how much the rental increase is going to happen. So right now, all we know is you can cash flow right now. So the urgency is there. So there's no need to procrastinate. So you have to pull the trigger, because the real estate market is not going to wait for you, right? So you got to be serious.
And we say there's inventory now. We have about 3 to 4 homes that'll be ready in 2 to 3 months. Again, 2 to 3 months out means they're probably at the higher end of that purchase price, probably close to 370, 375. We do have a couple homes ready in June, July. It's a little bit further out. We might get those a little bit closer to 365 or so. And then if we go all the way out to 9 months on those, single family and duplexes, duplexes are 525, and we could probably pull off a single family at 360 if we got a really favorable negotiation with a builder. But there's certainly opportunities. I mean, you'd be cash flowing money, by Q3 if you went with some of those homes that are ready, in May and June. So definitely really good opportunities here for investors moving forward.
Sounds good, Justin Zawodny. Thank you so much. If we have no other comment, really, this has been a very good presentation. We have disclosed a lot of great current information, the future opportunities in your market, Southwest Florida, Cape Coral. Is a booming market, is a great rental market as well. And with the bidding war for rentals and record low inventory and high demand, and you have off-market opportunities, you have a great relationship with various builders that no one really has in your market. So thank you so much, Justin, for working with our investors in the past and currently and for the foreseeable future. Thank you so much, everyone, for listening. This is Seewing Yee. Thank you so much. Have a nice day. Bye-bye.